Good afternoon, everybody. This is Hunter Mozingo bringing you your daily market insight video here on Monday, April 18th, 15 minutes after market close here in Jacksonville, Florida, 4:15 p.m. Eastern time to be exact. And today was a very choppy day in the markets. Although we recovered off of the lows when the futures opened yesterday evening, we still had a lot of green to red and back and forth action today, and some pretty sharp swings on an intraday basis as well. So we're going to get into the choppy action we saw on the indices, as well as some of the best and worst performing stocks of the day and the best and worst performing sectors. So let's get right into it. What was the performance like today? Not so great for the G6, as you can see, down about 1%. We saw some of the risk on areas do really poorly, and then some other areas act relatively well. For example, software had a pretty rough day today, and we're going to look at those charts in just a second. But G6, a laggard today, as you can see here. S&P basically finished flat, more or less, down just a tiny little bit, 0.02%. Q's slightly green, up 0.08. Dow also just slightly down 0.1%. Mid caps 0.1%. Russell 2000 down 0.74. 60/40 down about 0.2% as well, and growth protection slightly green on the day, up just under 0.1%. So like I said, choppy trading. Qs in the S&P not necessarily able to reclaim the key moving averages, but they did basically close right on key support levels that myself and Don have been mentioning. So we're going to look at that here in just a second as we get into the tail of the tape. But first, market state still in consolidation. Trend gauge, no changes here either. So like I said, we really weren't able to make any progress in terms of getting back above key moving averages like the 50-day, for example, or the 21. So really no change in the trend gauge from last Thursday's video that Don did to today. So no changes on the trend gauge. Market state remains the same as well. So let's go ahead and get to Revere real quick, and then we're going to get to the tail of the tape. Like I usually do, let me highlight Revere and myself here, and particularly my email. If you have any questions on what we cover here, or just a question in general about Revere, please don't hesitate to send me an email, hunter@revereasset.com, or you can reach out to anybody here, Merrill, Dan at revereasset.com, Don, or Tim at revereasset.com. So let's get into the tail of the tape here. And I've got the S&P up over here on the right-hand side of my screen. So as we can see here, market state still consolidation. Headwinds continue to remain the same. More so in focus at this point is the Fed's policy and the rise in interest rates. This is probably the #1 thing that the markets are focused on right now. Russia and Ukraine, obviously still very important and prevalent, but just haven't seen as many headlines dominating the markets like we were about a month or so ago. So moving along here to the sentiment section, put call basically closed right on 1. So kind of right around the median or the mean for where it's been for the better part of this whole year. VIX actually finished slightly down today, just a tiny bit, but still above that 20 level. And we saw the fear greed come back in a little bit. It was 45 on last Thursday, I believe, now 38. So -7 back into that fear category on the fear and greed index. Bull case, initiate the rally and reclaim the key moving averages. Like I said, we're not necessarily able to reclaim those key moving averages after we undercut them, as you can see over here. And that is actually probably not completely updated. So we'll refresh that in just a second here. And then bear case, rally failure, and break those reclaimed moving averages. That's what happened right here. And as Don said, that was confirmed on 4/14 as we had that nasty move back down there on the S&P. News-wise, over the weekend, we had Twitter's board come out with this poison pill plan to essentially oppose Elon Musk's hostile takeover. So that's going to be an ongoing headline grabber for the next couple of weeks, as you would imagine. Anything that Elon is involved in usually is. What were we watching today, coming into today? What would the S&P do at 21E resistance / this 4461 level, as you can see here? And what would happen at the support, this 4385 to 4400 level that we've been talking about on the S&P as being very big and important? And as you can see here, undercut and reclaim support twice. So we did that early in the day, and then right at the end of the day, we ended up going back slightly below that, but ended up getting right back into the middle, basically closing right in the middle of that support on the S&P and closing right on this 338-ish level here on the Qs. So two undercut and reclaims basically today, although the one at the end of the day kind of just got us slightly back above it, more or less closing right on it. So QQQ, we're watching resistance into the 50-day / that support at that 338.22 level. This has been a really big level for the Qs. Basically, this is where the lows of last week were. It was just battling / consolidating all in that range. And today we obviously undercut that 338 level, 338.22, but got back above it. Action wise, opened down just slightly, moved up, chopped, faded, had a big time kind of rally with a big up bar at 130, faded into the last hour, and then, like we said, towards the very end of the day, ended up coming back up a little bit, getting back above those key support levels and closing flat. So notes wise, we were really weak overnight. The lows on the Qs were closer to 334, lows on the S&P or SPY closer to 434, finished pretty decently off of those lows, as we've got noted here, near flat by the open this morning. So a pretty big recovery overnight in the futures session or in the pre-market trading. Performance wise, we ran through this here, but S&P opened down 0.15, closed down 0.02, G6 down about 1%, 60/40 down about 0.2, and then gross slightly green today, just under 0.1%. So sector wise, oil's pretty much strong out of the gate, and for the most part held on to that strength as the day went on. Gold, silver, and miners strong, fertilizers and semiconductors showing some strength after being one of the worst performing sectors over the last couple of weeks. Cloud stocks acting pretty awful today. They were kind of the laggard of the group today, or just in general. A lot of the other risk on-ish areas like semiconductors, for example, were acting okay, but the software ETFs and software stocks not really catching much of a break. We also saw healthcare and biotechs have a pretty rough day. MSOS, which is your weed ETF, and then your aerospace and defense as well. So portfolio wise, we sold SPLG and added SDS, which actually is going to lower our beta a little more. I believe this is supposed to be 0.27. That's a typo on my part. Bottom line for the day, choppy trading, unable to reclaim those key moving averages, like we said, but we ended up closing right on key support levels. So for all that choppy trading and kind of wild action on an intraday basis, we closed right on those support levels when it's all said and done. So moving here to the key levels, as you can see, the prior close 43.93, today 43.91. Basically not much of a change, even though we've had a lot of movement on an intraday basis. But today's close, like we said, choppy, but right on that key support, as we can see here, 43.85, 4,400 level, a recurring technical level since July 2021. And we are still just kind of stuck right in that range, holding on for dear life on the Qs and the S&P to those key levels. So for the Qs, that's 338.22. For the S&P, that's that 43.85 to 4,400 level. And also, as we always notate here, the 50 and the 21 have both rolled over. 50 now at 44.16, 21 EMA right around 44.53. So let's go ahead, get into the charts, and let's refresh this S&P chart for just a second here. And you'll see that that did not actually close near the lows like that candle was showing, more so in the middle of the range, give or take there. So you can see about a 1% range on the S&P today, 43.70 to 44.10, closed right in the middle of it. But I'm going to show you a 5-minute here to kind of detail some of the choppiness today, right? So this is the open. As you can see, we move up quickly, then down, consolidate, back up, and then fade all the way into basically lunchtime here. And this is that 130 rally that we notated. As you can see, some big candles up, and then a really nasty fade into the close. But those last 10 minutes, we actually ended up getting back more or less from 43.70 up to 43.90. So a pretty quick move up there in the last 10 minutes. But as you can see, this is today's action on the S&P, really indicative of what we were talking about when we say choppy trading, up, up, down, up, down, up, down, up. So pretty choppy day for the markets, for the indices. But like we said, clinging for dear life to these key support levels. So that's the S&P. Let's move along here to the Qs. 338.22 being the key level there. And as you can see right here, just barely eking out a close slightly above it, 338.69. The intraday chart is going to look very similar to what you saw with the S&P, but the key level or the key thing here is we're back above that 338. What you're going to want to watch moving forward, not only on the Qs but the S&P as well, is today's low. So that's basically 43.70 on the S&P, and on the Qs that's 335.79. So that's the lows for today. Something to keep an eye on, as well as the highs for today. So a move above today's high, something you want to monitor here on the Qs. But main thing, holding on to this 338 level. Maybe that gives it a chance to possibly repair some of this poor action we've seen over the last week and a half or two since this day, or since we topped out pretty much on a short or intermediate term basis here. Moving along to the Dow, DIA, which had been acting better last week, basically flat today, bounced off the 50. You can see we've just kind of been all over the place here on the Dow over the last week and a half or two. But main thing you want to point out, or I want to point out here on the Dow, is the way this RS line has been angling up, and that usually is synonymous when defensive stocks / defensive sectors are doing better. Usually the Dow does better, and that certainly has been the case on a relative basis to the S&P and the Qs over the last week or two, basically since the beginning of April, as you can see here. And then moving along here to small and mid caps, small caps first. They were pretty crappy today, for lack of a better term, but still staying above last week's low. That's an important level to watch. 195.88 is what that is here on IWM. Finished in the middle of the range, just like the S&P, just like the Qs pretty much. But below these key moving averages, below this key 200 level on IWM. So IWM, the laggard today, Russell 2000, not having a great day, lagging versus all the other major 5 indices. We talked about it a million times this year, but this 200 level is paramount. From a bull case, you want to see a reclaim of that 200 level and a reclaim of the 21, which is at like 201, and the 50 right there, basically on top of each other. Bear case, that's breaking these recent lows here, 195.88. That's what you don't want to see if you're a bull. So last index here, MDY, and then we're going to move through the rest of this pretty quickly. Basically hanging in there pretty nicely today, more or less right in line with the other indices, pretty close to flat. Not as close to last week's lows as IWM. As you can see, last week's lows 470.93, or excuse me, that is previous week's lows. 472.85 is the low from last week. So a little bit higher ahead of those lows compared to IWM, but very similar chart patterns, as you can see here. IWM and MDY continue to look pretty similar. And just like the Dow, they've been showing a little bit of relative strength over the last couple of weeks. So moving along, I want to show one thing here before we get into charts of individual stocks and sectors, and that is the TNX, your 10-year note. This thing continues to pretty much move at a vertical pace, making another high today, almost approaching that 3% level on the 10-year note. So that continues to be a massive overhang / issue for the stock market, and particularly growth stocks or long duration assets. So let's get into some of the better looking stuff from today, the good looking charts, right? And number one, we're going to start with Oxy. So up about 3.5%. You can see it did finish off of the highs for the day, but oil acting pretty well. We've got crude oil back above $100, back above its key moving averages. So that is a little bit of a feather in the cap for a lot of these oil names, helping them out. As you can see here, Oxy continues to look good. Chevron, another name that is very, very close to pushing past this 174.76 pivot. Both Oxy and Chevron owned in Grotection. Another name that had a nice day today that's owned in Grotection, GFI. As you can see, a wild range, but pretty big volume today on this one compared to the last 2 or 3 weeks. As you can see, getting a quick move back up here, almost getting close to that 1720 pivot there, as you can see. But a pretty big move for GFI, as we saw gold and gold miners have a pretty good day today. Moving along here, some metal names that report earnings pretty soon, but names that were strong today: Alcoa, STLD, this is a steel name. All of these names are related to the steel industry, and Nucor, all having nice days today. All of those have earnings in the very near future, so keep that in mind if you're owning or trading these stocks. Fertilizer stocks also continue their move, riding the ADMA here in MOS's case. CF, kind of the same situation, just not as pretty as MOS, or as clean, if you will, but both pretty much a very similar pattern here in this fertilizer space. We notated that that was strong in the tail of the tape. Also today we had Tesla and Nvidia showing some strength, which they had not been acting so well over the last week or so, but Tesla trying its best to get back above that 1,000 level and get back above the 21 EMA. And as you can see, it is very close to doing that. Basically, a move over today's high would reclaim that ADMA, and if it can close above today's high, that would be even better. Nvidia, which has been taken to the woodshed recently, as you can see, from 290 all the way back down to 210 in about a week and a half or two of trading, but finding potentially some support today, up about 2.5%. So those were some of the better performing big tech names. We also saw some of the other big tech stuff act pretty well. So Slv and Gold, we'll show this quickly here. You can see SLV up about 1%, GLD up a little less than that, but still green on the day, up about 1/3%, but continues to move up the right side here, possibly aiming to make an attempt at this 193.30 pivot here on GLD. And moving to what was not so pretty today, I mentioned the software stocks not acting well. So this is a medical software stock, down about 5% today. Move along here to Datadog, down about 4% today, another software stock. So this is where the struggle really was today. And I'll show you the ETFs themselves, which also struggled today. So this is IGV, the software ETF. As you can see, this has had a tough time since last November, from 450 to 300. That's a pretty substantial pullback for an ETF here. And the other ETF that's pretty popular in this space is Sky, cloud computing. Similar story here, from 120 to 76 over the last 5 to 6 months, and down about 1.5% today. So obviously, vastly underperforming relative to the indices today, especially with the Qs being green. Just wanted to point that out to you guys. Airbnb, down about 3% today. This one had a really strong move up last week, and along with Delta Airlines and some of the travel names, giving a lot of that back basically today, right back to the 21 EMA. Worth keeping an eye on though, is there's some pretty decent volume patterns here on A, B, and B. Another name, or another area that struggled today, was healthcare, and not just biotechs. We saw Regeneron pull back. ABBV, which had been a big time leader, had some stuff come out with, I believe, new CFO or CFO leaving. Not 100% sure on that, but some news came out, which is part of the reason for this decline here, but down about 2% today. And then XLV, the ETF, the healthcare ETF, down about 1% today. So lagging today for sure. Healthcare not really having the greatest day. Some other sectors that lag today are the defensive sectors, which they've been really strong, but I do want to point this out here on XLU, which is the utilities ETF. First time this is going to close significantly below the ADMA, or below the ADMA, pretty much since the middle of February. So it's been a good 2.5 months almost of a big time rally for XLU. First time closing below the ADMA on XLU in quite some time. XLP also down today, as you can see, did not close below the ADMA, but I just want to point out it was a laggard today, when these sectors have been significantly leading sectors. They continue to outperform over the course of this year, really over the course of the last 2 to 3 months. And lastly here, I mentioned biotech struggling. I just want to show this chart. As it appears, they broke down pretty nasty here. Was looking pretty good. Moving averages were assimilating in the right order, and then in a matter of 6 trading days, things look drastically different. We're now within just striking distance of taking out those lows. So biotech's not looking exceptionally well. So that is going to wrap up today's video. If you have any questions, as always, send me an email. But thanks again for listening, and I'll see you guys on the podcast and Thursday's video. Have a great week, everybody.